just how important was this PCE read to the overall picture for the Fed and rates?
Well, it's something that they have already incorporated, something the market's already incorporated. It was a very, very close, as you said, it was spot on in terms of the economists taking the CPI, taking the PPI, coming up with a really good estimate on the PCE. And it came in as expected, which was higher than expected. And it's a reason why the Fed is being less aggressive about the idea of cutting interest rates. At the same time, it's a number that many people think is a bit of an anomaly relative to the trend of inflation coming down. I was very glad to see that Jay had this call of May rate cuts, which was my call, and I know he thinks there's more risk around it. But look, if you get it back on track for a couple more months before the May meeting, I don't think it's out of the question. And if you treat this and think about this as more of an anomaly than the trend, then you can think that maybe sometime late spring, early summer, the Fed could be cutting interest rates.
Well, it's a good thing, Steve, that we have the horse's mouth, the primary source here to kind of talk about that right now. With that in mind, Jay, because Steve pointed out the expectations that you have, it might be good for us for the record to hear just what the expectation is from you for those rate cuts, if and when they happen, and if the data that came out this morning really did anything to change it, even though we know it was bang in line with expectations.
Yeah. So, Dom, I guess what I would say is our official forecast, which we did earlier this month, was looking for them to go into May, to go 25 basis points on May 1st. That was before the CPI print came out, which is hotter than expected. And, as Steve just, pointed out, I mean, we're still sitting at May at this point. I think the risks are skewed towards June. At this point, we're going to have two more, PCE prints between now and then, two more employment reports. So we'll see what the data say going forward here. Again, I think the risks are skewed, in that direction. In terms of today, I don't think it really did anything moving that much in terms of today. We knew today was going to be a little bit hot in terms of PCE, and it hasn't really changed our thinking all that much.
There is a consensus, Jay, building around about at least multiple rate cuts throughout the course of this year when they do start, and most people are now tilting towards that kind of May to July timeframe for when they do kind of kick off. How many do you think happen? And in total, I mean, some people are saying 100 to 125 basis points. If that's in 25 basis point increments, quarter point increments, that's 4 to 5. Where do you stand?
Yeah, so, again, if I look at our official forecast, we're at 125. I think the risk is skewed a little bit lower than that, maybe 100. Going 25 basis points at a clip. To go 50, I think you really have to see the economy being in trouble. And that's not what we're seeing at this point. And so we see a modest pace of easing, and largely because as inflation comes down, just to keep the stance of monetary policy the same in terms of the real rate of interest, the Fed needs to be cutting. And so if inflation is slowly receding from now, we think a slow pace of rate cuts going forward is probably, the right look.